course, the general picture for, I think, all the three markets is the enormous amount of capital to be invested. And that must mean a pressure on the yields. But I think when you look at at the user market, so not at the capital market, but at the user market, they show you a really different picture. In London, where you see prices of real estate, well, they're not bottoming out, but they're topping out, so they're not rising anymore, at least not in the city. They are in the suburbs. In Germany, you see really a lack of residential products, which meaning that rents are still rising. And when you combine that with really pressure on yields, then we're very positive about the outlook over there. And well, and maybe what's interesting in Germany is the rent level. It's much lower than the rent level in the United Kingdom. So that's also meaning that there is some room for an additional raise of the rent level. I think, well, in the Netherlands, well, we see a bit mixed picture over there. Also, a lot of capital available here. So I'm really surprised when I look at the valuation figures in the Netherlands that I don't see a significant drop in yields yet, but it has to come in the following months. So of course that will mean a value increase. On the rent side, I think I'm a bit more moderate, so I don't expect the same thing happening in the Netherlands as we see in Berlin at the moment. But I'm sure we will also see some raise in rent levels over there. And what you're both seeing in London, but also in Berlin at the moment, a lot of building cranes there being active. I don't see them yet that much in the Netherlands, but I'm sure that in next year or the year after, we'll also have some additional building capacity also in the Netherlands, and maybe that will bring the residential market more at ease for short term.